Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go over our live mortgage rates, and then we're going to be talking about CDFI no income verification loans. Give us just a moment here to go live on all the different platforms. Go ahead and drop a comment there in the chat as you tune in. Go ahead and check in with us. We definitely appreciate it. All right, I see some comments coming in there. Great topic here today. Very special topic here to talk about today. So exciting stuff here. Looks like we're live on all the different platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping your comments there in the chat. Drop any questions you have in the chat as well as we go through here for our deep dive in today's very special training topic. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type, very great topic, which is the CDFI no income no ratio loan. So Jose will take us through some special examples here shortly, but before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and check out today's rates and see what they're looking like.
All right, I'm gonna go ahead and refresh them in my other screen. A little bit of activity today with a big announcement coming shortly, but fortunately rates have hit, I believe it was 6-month lows today. We will pull up all our programs for today. It is July 31st, just after 11 a.m. So all the programs, initial rate sheets are live here for our standard programs. And if you need a full breakdown of all the itemized fees and go into the APR, please get with our team members. We have over 300 loan officers that would be happy to send a full loan estimate. For all the demos, we'll use a scenario to compare across programs. It's going to be a basic scenario, a single family home, 500,000 purchase, 400,000 loan. That corresponds to 80% loan to value, 20% down payment. We'll set the estimated credit score to 760 and the estimated debt to income ratio to 40%. So those are our basic settings. Let me go ahead and share my screen here. So first up is our 30-year fixed conventional option for a primary home. That's the typical option most people think of when they think of a mortgage. Rates today come in at 6.375, final APR 6.684, right about the same as it was yesterday. Hopefully we see that change throughout the day. If for any reason our customer doesn't qualify for a standard conventional program, the next option we typically want to present is an FHA option. FHA allows more leniency on credit issues, as well as a much higher debt to income ratio overall. However, it does require upfront and yearly mortgage insurance. The rates come in today at 5.5 with all of the additional fees and mortgage insurance. Final APR comes in at 6.452. So if our customer qualifies for both, it could be a touch cheaper to do FHA, but it does require that yearly mortgage insurance. And our customers that need to use it, definitely a good option. It's very comparable to conventional. Moving on to our VA option, great option for our eligible vets and active service members. If you are eligible for VA, definitely take advantage. Rates as low as 5.75, final APR at 6.031. So when we compare across the standard programs here, VA is always going to be the best option for our eligible vets and service members. And the final option we always go over here that's standard for any bank or lender is USDA. It's only eligible for properties in USDA areas, the rural areas of the country. So if the property is eligible and our borrower is eligible, these are good options. USDA comes in at 5.5 rate. Final APR with all the fees included, 6.254. So if our customer is comparing that typically to an FHA example, the USDA is going to be a touch cheaper. And if they're comparing it to a conventional, USDA is also going to be a touch cheaper typically. So good option for our customers looking in those areas. Now that rounds out the standard options. If any of our customer doesn't qualify for any of these standard options, most banks or lenders have to deny them. But we have over 5,000 other options here, starting with our 30-year fixed non-QM alt-doc option for a primary home. So if our borrower doesn't qualify for conventional or any of the other programs, needs to use alt-docs, we switch to this. We can use bank statements, 1099s, P&Ls, and similar options. This option here, typically the lowest rate option is a bank statement option, coming in at 6.75, final APR 7.093. So notice we're within half a point of conventional to use alternative docs. So for our customers that need to use it, it's definitely not the end of the world. It is very comparable in pricing. And moving on to our investors, investment properties, lots of flexibility with our non-QM programs. First up, our non-QM alt doc option for investment properties, such as bank statements or similar, coming in at 7.25 rate. Final APR 7.568. And we'll compare that to our other options here. There are no government programs, so no VA, USDA, or FHA for investment properties, but we do have our conventional option, 30-year fixed conventional for investment property. Comes in today 7.125, final APR 7.482. Not much change since yesterday, but we always recommend our investors to check out our DSCR options, our favorite loan programs. No income needed, no employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can exceed the expenses, aka the property cash flows every month, that's a ratio of 1 or higher, which is preferred. And we set all these demos at 1.5, which is the highest option, so we see all the programs. First up here is our 3-year prepayment penalty option, which is pretty standard. Rates come in today at 6.75, final APR 7.067, which beats conventional and alt doc by a long shot. And we can get even lower with our 5-year prepayment penalty. Some of our programs allow rates as low as 6.5, final APR 6.798, again beating conventional by a substantial amount. And there are options for no prepayment penalty, since some states do not allow it and some investors don't want a prepayment penalty. No problem. Rates as low as 7.25, final APR 7.608. Very comparable to conventional. I'd say 100% of investors would choose a DSCR loan, even if it's slightly more expensive, and always recommend them to check out our prepayment penalty options if applicable. And our final 2 demos here, very popular request, our 30-year fixed second mortgage. So second mortgages in the past were typically HELOCs, which are very high rates right now and are variable interest. So we have our non-QM 30-year fixed second mortgage programs to solve that problem for our borrowers that have a low rate first mortgage and still need some cash out. This option is lower rates than HELOCs typically, and a fixed rate is better typically for most customers than a variable rate. So 30-year fixed second mortgage for a primary home to get cash out, rates come in at 8.5, final APR 8.930, and these are non-QM programs, so we can use bank statements and similar. And for our investors out there, HELOCs are very rare for investors, so this is a great option. 30-year fixed second mortgage for investment properties, get cash out without touching that first mortgage. Rates as low as 9.875, final APR 10.093. So those are great options for our standard programs. But today we're going to talk about something that is very outside the box and not standard. So first off, you're probably wondering how we can do a no income verification loan, and Jose needs to explain how we're allowed to otherwise break the law, where it would otherwise be illegal to do these types of loans. So Jose, first explain this special CDFI designation, and then let's check out the actual rates.
Awesome. Good morning, everybody. Yeah, this is always a very exciting topic, mind blower, because if you all recall, the Dodd-Frank Act requires all mortgages for primary and second homes to have an income verification component. However, the Department of the Treasury, basically working with banks, certain community banks, have initiated this CDFI program, which is meant to lend to underserved communities and underserved groups, sort of like the Community Reinvestment Act of the late 90s. So what they have done is they created this program which basically circumvents the Dodd-Frank Act with the approval of the U.S. government, so that we can have these programs that are no income verification, no job verification either, for primary and second homes, for purchases rate and term refis, and cash out refis. Now, it's not a 3% down program because if you have a program where they're not verifying employment, not verifying income, and 100% of the funds to close can be from a gift, they're going to have some type of control. So it is maximum 80% loan to value on the purchase and maximum 70% loan to value on the cash out refi. But great news on this is that second homes have the same loan to value and the same pricing as primary. So it's a great option. We've been able to use this program as an example. Some of the preferred uses of this program would be you have someone who, let's say, executive or on a high salary, switching jobs, has plenty of assets, maybe moving to a new market, haven't accepted that job offer in the new market yet. They have multiple options, but they don't want to be tied into just the first one only because they need to get approved for that loan, right? So they can, as long as they have the 20% down and the reserve requirement, because there is a reserve requirement for this loan anywhere. It's been changing around. So it was 12 months, maybe a little bit less than that now. But as long as they meet that reserve requirement, 20% down, they can get it and transfer to their new market, get the home, and then decide which of the multiple job offers they may take so they can get the best one. Right? It could be a big difference between accepting something calmly or just grabbing the first one only because you want to close on that loan. That could be $10,000, $20,000, $30,000 a year difference, much more than the payment difference if you were to try to do this loan full doc, which would not be doable anyhow. Another example, we've used this program a lot for the crypto investors. Plenty of assets, not verifiable income. Great program for this. So anyone who's in a cash-based type business where they cannot necessarily document all their income, this is a great program. And another way we've been able to use this as a second home, right? So we've had U.S. national borrowers living overseas, right? Either U.S. citizen or a primary resident living overseas now in another country, working in another country and not declaring income in the U.S. That's not a problem. They can buy a property here as long as they meet the credit requirements and the asset requirements. They can buy the property in the U.S. as a second home. Done that numerous times for borrowers abroad looking to buy something here. For example, daughter is going to be going to the university now, so why pay for student housing? Just buy a property, have them live there, and then rent it out afterwards. That's a win-win situation for everybody. So let's go ahead and share these mind-blowing options today that we have for the CDFI program. Oh, one other thing that I wanted to note about the CDFI program is that for our loan officers out there, when you are pricing this program out, you will see a checkbox that says CDFI eligible. If your borrowers are African American or Hispanic, you will be checking that box because those are the target minority groups for this program. And if you are in those groups, you get an additional discount off of the rate, right? So CDFI eligible. So here our best case scenario is with a 740 plus credit score, 20% down, and you're looking at 9.375 at a cost of 1.75 points in loan discount. Now, please do be aware this is a brokered product with borrower paid pricing. That is the only way this product is offered to the market. So this is our best case scenario here, 740 plus credit score. So now our 720 to 739 credit score. Let me see if I can make this a little bigger. All right. Sorry, 720 to 739 credit score. You're looking at 9.625 at a rate of and a cost of 1.75 points. So rate does increase a little bit due to the 720 to 739 credit, but the LTV is still at 80%. Now, when our score drops to 700 to 719, we do get an increase in the down payment to 25% down. So we're at a 75% LTV, and our rate is 8.99, same 1.75 points. I tried to keep the cost at 1.75 across the board, just so that we could be comparing apples to apples, but they do usually have 2 to 3 rate choices for this product. Now, 9.875 at the same 1.75 points is our 680 to 699 credit score. But the great news here is still only 25% down at a 680 to a 699 credit score. And our last option for the purchases for this program is 35% down with a 660 to 679 credit score. That is the lowest minimum. That is the minimum credit score allowed for this program. 35% down, 65% LTV, and our rate, almost didn't show you that, 9.625 at the same 1.75 points. So not much variation in the rate when the score drops, because we are dropping the loan to value. Now for some cash out options, we'll let you know that 70% LTV is the maximum LTV for this program for all credit scores. The best rate options are at 740 plus credit. So in this case, we have our primary cash out refi with our 740 plus score, 9.375 at a cost of 1.25 points is the interest rate for this cash out refi. Now our 720 to 739 credit score option for our primary cash out refi is 65% LTV max. So LTV does drop to 65 when you get below the maximum tier of 740, but look at that rate. As we drop the LTV to 65, the rate substantially drops to 8.75 when you have a 720 to 739 credit. So for our 700 to 719 credit, it's 65% LTV again for our cash out refi of our primary. Rate does increase a little bit to 8.999 from 8.75, but the cost does remain the same at 1.25 points. And our 680 to 699 credit primary, again, 60% LTV. Our rate does increase again slightly, 9.125, the same cost, 1.25 points. For our 60% LTV option with a 680 to a 699. And then our last option here for the primary refi is the lowest credit tier of 660 to 679, still 60% LTV, which is the maximum LTV for a 660 to 679 score. 9.5 is the rate at a cost of 1.75 points. And our last option here, wanted to throw in there a second home purchase just to put a little context so you can see that the rate and the cost is the same. This is 80% LTV, 740 credit, and it is the same exact rate that we had for the primary purchase, 9.375 at a cost of 1.75 points. So please do remember, when you have those tough files, primary, second home, trying to figure out the income, and the borrower has substantial assets, definitely look to the no income verification, no job verification CDFI program.
All right. Thank you, Jose. Looks like we have a question here. If you have any questions, go ahead and drop them there in the chat. Looks like we do have a question, which we went over some of it, but the question is, what are the credit requirements and asset requirements?
Well, you saw we have a minimum 660 credit score is the minimum for any LTV for this product. So if you're below a 660, look at the credit report, run a credit simulation, and see what can be done to get the borrower's middle score to at least a 660. You saw the maximum tier 740 or above. You don't get any better pricing. So that's all good there. As far as asset requirements, there is a substantial reserve requirement. I'm not going to state 100% what it is, because this program now, as we're getting more liquidity back into the market, it is evolving. The last that I checked, it was a 12-month requirement, but it could be a 6-month requirement. You could check on the guidelines on that. But the good thing for this program is that it does allow 100% of the funds to close. That includes for reserves, down payment, closing costs. It does allow it to come from a gift. So very interesting here how this product is geared to assist borrowers get into a home.
So you're saying somebody could have none of their own money, no way to prove a job or income, and still get a gift to be able to do it?
Yes, man. We don't want to hold them back. If they have the 20% down and the credit, they got a home. But I will state now, we want to really put on our loan consultant hat, and we don't want to just be churning out loans for the purpose of getting a closing, and then 3 to 6 months down the road, this borrower is struggling because that's what they had. 20% down, 12 months reserves, and no way to access any additional funds to make payments. That's not the borrower for this loan. And yes, the question there is, this program is for primary and second homes only because of the nature of the program. This is not a program meant to get loan officers loans. This is a program meant to get borrowers that normally would not be able to qualify for a home into a home, right? That's so that they can have a nice foundation to their life.
All right. I don't see any other questions, so I think we can go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday, where we go through our live rates, and then we do a deep dive into different loan types. We'll be back tomorrow with a new loan topic to talk about. Appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode.